Welcome back to another Stock Market Open live stream. Today is, well, the week, I should say, is the week that we get the very exciting CPI data. Tomorrow, actually, is CPI data. Today, we get one-year inflation expectations from the New York Fed, and after that, we'll get CPI tomorrow. Should have a lot more estimates now on CPI, so we'll take a peek at these. We've got CPI expected to be 0.2 month over month, 0.3 month over month core, 2.9 year over year, 3.7 year over year core. But if we go into the month over month core, let's see if we can get a little bit more detail on some of these estimates. Sometimes we can, sometimes it's funny and we can't. So let's see what we can do. Yep, nope. It seems to be a little funny. Oh, here we go. Oh, they changed it a little bit. How interesting. Okay. No. Let's see. That is still being a little fussy. How interesting. They just updated that. And that is different. Okay, well, I'll get to the bottom of how to get into the different estimates here. But anyway, we'll be getting our January inflation data tomorrow. So I'm excited about that. Economist says, how interesting. They have messed this up a little bit. So, all right, whatever. We'll get to the bottom of that. So, anyway, we'll get those numbers tomorrow. And then, of course, we will get the rest of the week. We'll have import prices, export prices. Those will be on the 15th. So those will come out on Thursday. And then on Friday, we'll have PPI and Michigan sentiment. PPI has changed a little bit. This I remember, if I remember correctly, it was down at 0.2 last week when I was looking at it, but now I've got 0.1, 0.1, 0.1 across the board for all the month-over-month figures on PPI, which is interesting because I thought producer prices might have shown a little bit more of a push up in the PPI reads, mostly because of what's going on in the Red Sea. I thought we'd see a bit more of a push there. But so far, no indication of that. Let's jump into the sticks and pre-market here. Pre-market, we've got, let's see here, pull up the gainers. We've got Intuitive Machines is up at 19%, Joby Aviation 8%, Ubiquity's up about, well, a couple here, 2% or so. Enphase 125, Fair Isaac 123, Nvidia 0.91, again on Nvidia, look at that, 727 now, just wild, huh? 727, incredible. And then Rivian and Palantir on the downside here. Rivian's down 378. Palantir down 160. Hope you had a chance to watch the Super Bowl yesterday. I guess if I was going to have a comment on it, I'd say the first half was somewhat uneventful. But boy, the second half was entertaining. So was happy to see that. It was sort of a nail biter there in overtime. So, but the first half, I don't know. It almost felt like a soccer game there for a while. Just back and forth. But you know, those are just my opinions. So next we've got bonds. Bond market this morning looks like mostly stable, but down a couple points here on the 10-year, down to 4.16. No biggie here. I think the 10 or the CPI read tomorrow will really give us a true indication of what direction these yields should be going. We've got the 5-year break even sitting at 2.29, so nothing super exciting there. And let's see here. How about, oh, this is interesting. Barbara Corcoran's opinion of where to buy a house. Go anywhere that has a poor school district and where prices are really low. That might not be the best for where people want to raise a family, but there's always a cheap house to buy. Interesting. Yeah, okay. Not, gosh, that feels just like the opposite of what you usually hear. That's very interesting. I'm not sure how I feel about that. Very poor school district and prices really low. Okay, all right, that's interesting, Barbara. Anyway, then we did have Israel start their operations in Rafah They're arguing at least that they've freed some hostages, and they're using, well, will likely continue to use that as justification for a more broad incursion into Rafah. You've got a lot of refugees there, so you've got some serious concerns about civilian casualties. All of this, unfortunately, increases the odds of tensions in the Middle East. Geopolitical issues do end up weighing on markets, and not only markets, but people's lives. So something to pay attention to. Then we have, let's see what the suits are complaining about this delicious Monday morning. Inflation may have fallen from its peak around the world, but in the inflationary regime in which we remain, upside surprises are more likely. Ooh, why do they get to be so pessimistic? Global bond yields have fallen almost everywhere in recent months, but that shouldn't distract from the fact that underlying conditions remain combustible. Ooh, okay, fancy phrase there. Let's see. Fed traders are to find persisting with a May rate cut an expensive play. The market sees a 75% chance the Fed will cut in May. Should inflation due this week print along lines of the forecast by economists that pricing may fade. Consumer prices are expected to have increased 2.9% in January, slower than a month earlier. Core inflation is expected to have slowed, but by a slower margin, blah, blah, blah. Let's see here. Still far from the Fed's target, but I don't know if these suits here recognize that the Fed doesn't need inflation to be at their 2% target to cut. Jerome Powell said that about 37 different times over this last 2-year cycle. But that's somewhat what this little article here. Oh, every time I hear, oh, well, still far from 2%. Oh, yeah, so? So? I don't know. Whatever. It's the way you get it. The way the cookie crumbles on the mainstream. Well, let's see. All right. Let's see here. Who do we have here? So, well, all right. Don't want to function. It's Monday morning. Yeah, okay. We'll come back to that then. All right. So let's actually see. I want us to take a peek at the monitor and see what we actually have for. Oh yeah, there we go. Okay, so we are at a 16% chance for March of a cut. So basically no chance. And then you're actually only pricing in about a 60% chance for May. They've really started pairing that. Let's listen in here for a moment.
Bitcoin had a pretty good rally over the weekend, but it is pulling back a little this morning, just below 48,000.
Some new retail data just out. Steve Leisman has those numbers for us. Hi, Steve.
Good morning, Becky. Yeah, after a strong holiday shopping season, looks like consumers took a little bit of a break in January. The CNBC NRF Retail Monitor, we use credit card data from Affinity Solutions, registering a modest decline in January. Retail sales ex auto and gas, that's our top line number, down 0.2%. That's after a 0.4 gain in December and 0.7 in November. Year over year decline to 2.3 versus 3.1 in December. Core retail, that removes restaurants, down a little bit less, 0.04. You'll see why in a second. That's against 0.2% in December. The year over year, though, increasing to 3.2%. The January decline, though, follows 2 strong months right in the heart of the holiday season, so that was good. But it could challenge, we don't know yet, some of the GDP forecasts for this quarter of around 3%, especially if that weakness is repeated in February. Here's how we got to the negative number. Gas station sales falling minus 1.3%. I will tell you that sometimes you get a decline one month in gas sales and some of the discretionary stuff goes up the next month. Right now, furniture and home furnishings were down 1%. And then you had a decline in food service and drinking places that could have been hurt by some bad weather this month. But clothing and accessories were up. Non-store retailers, that's your internet, that was up. And electronic appliances had a good month, up 1.3%. Here's the way you can see how the CNBC NRF Retail Monitor, they've tracked with the government data. Forecast looking for a 0.2% increase ex autos and gas. That'd be reported by the census for January on Thursday. Now, depending upon where January inflation numbers come in tomorrow, that is, so make sure you tune in at 8:30, this number could show that real consumer spending was flat or even negative for January. Watch to see if this is the beginning of that slowdown that's long been expected but hasn't yet arrived, as you know, Becky.
Yeah, that I think is the big question. I mean, as long as the consumer hangs in there, as long as the consumer is strong, I don't know too many people who think we can head into a recession. I guess it's 70% of the U.S. economy is consumer driven.
It's a big chunk of it. And look, let's not get too carried away with this 0.2% decline, because remember, what we're looking at for the quarter, the reason why some of those GDP forecasts are so high is you raise to the level of December, and if you continue it more or less in January, it's still pretty strong. So we're not going to really, raise the probability of recession based on 1 month in January. But it is interesting they took a bit of a break in total in their spending. I'm waiting to see, Becky, to see if some of those housing-related sectors, the furniture and homes, some of the building materials, if they start to come back. We've had a little bit of loosening in the real estate sector, and that's been a real laggard. And it's been interesting to see retail do quite as well as it's done with all those home sectors lagging behind.
You know, Steve, the one thing I've been thinking is we look at all this data and we keep looking for the next thing to happen. But the last few things that happened shocked the consumer because it was something we hadn't been anticipating, whether that was COVID, whether that was the financial crisis that started somewhere else. I mean, we can watch the consumer, and that's a great indicator, but the consumer's strength and confidence can drop off incredibly quickly if there's an external event.
I think that's right, and I think let's look at employment, which has been, as you know, stronger than many expected. Wage gains have been pretty decent, in fact, higher than the street was relatively comfortable with. So you're right the way you frame the question as well, because it takes a shock in order to derail the economy. And so far, it's interesting to me. Obviously, you have to really be concerned about the flare-ups in the Middle East. It has not caused the kind of shock that perhaps other kind of events that way, say 10 or 20 years ago, might have caused. We've talked about the issue of so much of our energy comes both from the United States and from North America, so it's disconnected a bit from what's happening out there. It can be replaced. That's one aspect. You do have some fall off this year, as you know, in federal spending. It's been very elevated. It will end up being, many believe, a drag this year. That could have some impact. But you're right to look at a shock, which is to say, Betsy, you got to screw it up for it to go wrong.
Okay, Steve, thank you.
Pleasure.
All right, coming up, we're going to speak with former SEC Chair Jay Clayton on the stress in the banking system and the role of regulators. Also, much more. This stems from the trouble we've seen at New York Community Bank Corp. That stock down 50% in the last 2 weeks. Stay tuned. You're watching Squawk Box on CNBC.
Ooh, Jay Clayton. Wonder what they'll talk about. Anywho, let's look at J.P. Morgan's take here on CPI estimates tomorrow. I always love sort of looking at these. First, they say we're taking recent Fed speak at face value, and barring a collapse in inflation data, we look to June or May for the first rate cut. Our hypothesis is not predicated on the Fed cutting rates, since we continue to see mega cap tech earnings print, irrespective of the rates environment. Right, and these companies have a ton of cash. But as far as actual CPI estimates, so that's regarding Fed on cuts. When it comes to CPI, we've got recall Powell said he is looking for more good data, but not necessarily better data than we have experienced over the last 6 months. So let's see what their forecast is. Here you go. Okay, so this is their trading desk. And what do we have? They think we have a 2.5% chance of getting a number above 0.4. First tail risk scenario would likely reflect a stronger than expected gain in housing prices and a lower than expected drag from commodity prices. So if housing doesn't end up pulling markets or pulling inflation down as much as expected, this outcome would trigger a large response in treasuries, with a March rate cut expectation going to 0, significant decline in the May cut, currently at about 54%. It's about 60% at the moment we looked at it a few minutes ago, but okay. Further, you would see a material amount of investors questioning rate hikes this year rather than rate cuts. Right. So if we got a number over 0.4, we'd have some problems. While the bar to rate hikes is still too high for the Fed to resume its hiking cycle, the uncertainty would induce some large moves. Yeah, I'd agree with that. People don't really like uncertainty. Uncertainty bad. And then, what do we got here? Similar to the tail risk above, the worry here would be that clear signs of core inflation are accelerating, with headline inflation unable to break below 3%. The market will care about the mix between core goods and core services. If a hawkish surprise was driven by a re-acceleration in core goods, this may put a greater lens on supply chain/shipping costs induced by the Red Sea, potentially adding more future headline risk. Yeah, I don't really see that. It's gonna be tough to see. Well, but then again, it is January, so you got a couple things going here. Let's make a little note. January is the month we often see companies raise prices. Okay, but let's write this down. But obviously, from earnings, there's a limit to how much companies can raise. Okay, and then regarding the Red Sea, it seems odd that if Red Sea were super concerning, why are PPI prices, producer price index levels, I guess, or estimates, so low? All 0.1%, right? So there's a reason to see a higher number, but then again, this should be seasonally adjusted, and then of course, this is just what we're practically seeing, a lack of price hikes, so to speak. Let's see, what are they yapping about? They're talking crypto or real estate?
Rates stay where they are and office occupancy stays where it are at a number of smaller banks.
We had lots of debates about a year ago now, maybe more, about whether the government really was guaranteeing deposits, whether this implied guarantee was explicit, implicit, what was really happening, and whether the numbers needed to be higher if in fact the bank were. Do you have a view about that today?
I think and maybe I'm getting out over my skis. I'm not a regular. I think that implied guarantee is still there for excess deposits in the context of some of these isolated stresses at banks. I believe it's still there.
Okay, I want to switch topics on you.
Yeah.
Elon Musk. We were just talking to Walter Isaacson about it before. What do you make of what's happened in Delaware with that decision? What would have you done? By the way, you have been at odds with Elon Musk over the years. And what do you think is going to happen in Delaware as a result of that decision? Well, let's start with the decision itself.
Okay. Why is Delaware the home for many corporations? Because it's predictable, and when you look at things in hindsight, and almost all court actions are looking at things in hindsight, Delaware generally doesn't second guess.
Okay.
And they don't second guess on two levels.
But they just did.
Well, that's really the issue here, okay? If the substance is right, you ought to be fine. If the substance turns out with hindsight not to be right, then you look at whether you followed a good process. Some could criticize this decision as saying, because the process was flawed, it really doesn't matter whether the substance was right or not. And those directors, I think those directors honestly believed that they were making a good bet with shareholder equity.
So here's my question to you, though. So part of the argument that the judge made effectively is that the process was problematic because the directors unto themselves were not independent, and therefore their endorsement effectively and negotiation of this deal was not independent, and therefore the proclamation that this was a good deal, which they told shareholders, misrepresented something, and therefore shareholders were voting with bad information. That's basically
that's a very good description.
the way they've described it.
Yeah.
Okay. I have a view, which is that the public understood that this board was not as independent as maybe you'd like it to be. But my real question is, if that is true, where is the SEC?
Oh, where is the SEC on whether the board is as independent?
Meaning if the board really is not, if this is really not an independent board, if that is actually at the crux of the matter here, where was the SEC 5 years ago? You were there to say, forgetting about the compensation package, or by the way, where were the exchanges, or where was whoever was supposed to be, minding the store to say this board is not independent, and therefore this is a problem, and it needs to be fixed?
That's an interesting question. The SEC is largely a disclosure agency. Were these people honest in disclosing whether they were independent or not would be a question for the SEC.
Yeah, except that this judge has decided, by the way, that they were not honest.
That they were not honest in describing their relationships around this, what I would say is compensation decision. In terms of,
well, I would say even more broadly, she's making the argument that she doesn't believe they were ever independent. I'm not saying that I agree with her. I'm just saying it is what it is.
The requirements are a little technical. You have to have a fully independent audit committee. So the question of whether they have a fully independent audit committee is sort of the first one. The question of whether the board was, each member independent for New York Stock Exchange or NASDAQ exchange provisions may be different from the judge's view on whether they were independent in making this type of decision.
So what happens now?
What happens now?
Yeah.
That is the question. First of all, it's going to be on appeal, right?
Yep.
And if you're the directors, you have to appeal this.
Is there going to be pressure on this at the appellate level on them in Delaware to say we got to reverse this, otherwise every company is going to go to Nevada or Texas or wherever they're going?
To be non-technical about it, I think the question will be, does a bad process invalidate good substance, assuming the substance of the decision originally was good, right? If the substance was bad, if the Supreme Court in Delaware says the substance was bad and the process was bad,
but the shareholders
that's fine.
voted on it.
Well, that is the interesting thing. The shareholders voted on it, and look, was it an outsized? Was it a unique pay package?
But I remember at the time it seemed like it was nearly impossible.
But nearly impossible. And did shareholders benefit from a remarkable rise in the stock price? Yes, they did. So where are you going to go? You're going to validate the decision and then find some way to post hoc compensate, which isn't going to be anywhere close? Or are you going to say, look, terrible process. This is not a board that's functioning the way it should, but on balance, the substance of the decision was right. That'll be the question going forward.
Ooh. I think what he's saying is actually very reasonable. We'll see what ends up happening
There.
Ever since the flamethrower, I always think Elon's give him a thumbs up. Think how much money for him to. How did he even have so much confidence to think that the shares or the price would grow into where he'd be compensated like that? I don't.
Anyway, it doesn't matter so much. Yeah, I think it's interesting to hear this from the former SEC chairperson, Jay Clayton here, his sort of perspective that the reason people incorporate in Delaware is because of predictability. And when you lose that predictability on something that shareholders voted for, you get a company that is, or you get a situation that becomes a lot less desirable, becomes less desirable to incorporate in a state like Delaware. So what does that do for Delaware? Well, as we saw, what was it? Elon moved, I think it was it either Neuralink or I think it was Neuralink. Elon Neuralink. I think he moved one of them to Nevada. Yeah, there it is. Elon Musk's Neuralink ditches Delaware, reincorporates in Nevada. I think that was probably the easiest company to move their corporate entity from. And boy, that was a That was a quick move. Clearly sending that middle finger to Delaware. That'll be interesting. See where that goes. But anyway, looking at Pepsi here for a moment. I've been waiting for this. Excuse me. And boy, this is actually kind of delicious. So remember, Pepsi last year at this time was bragging about 9% price increases because they were comparing back to 22. And I'm like, there's no way. Y'all are misleading everybody. This is some BS. This is stupid. And what do we have now? Well, they're talking about a slowdown in the fourth quarter due to pricing and the income situation. In other words, y'all have raised prices too much for Pepsi. Too many price increases for Pepsi. What do we have here? We feel good about the consumer in 2024. We feel good in the sense of very low unemployment and about the fact that wages will go higher than inflation next year. And we hope that by summer, interest rates will go down and create another source of oxygen for disposable income. The reported volume decline is sort of bigger than what we've seen last time for this business. So in other words, because they've raised prices, they're starting to take it in the volume. Oops. Implication for volume. So what are they going to do? What are they going to do to try to get volumes back? We'll go over here to page 10. All right, what is this? Any color on pricing? Yes. I think you should be thinking about, we want to grow units next year. So what does that mean when a company wants to grow volume when they're talking about pricing or in the context of pricing? Well, if their response is we want to grow volume, they're talking about reducing prices or certainly not raising prices like they did last year, right? Well, let's see if we're right. We will see profitable volume growth next year. You'll see a more balance between pricing and volume than you've seen in previous years, where obviously we had to cover a huge commodity increase and OPEX increase. As commodities kind of normalize and OPEX inflation normalizes, that lever, the lever of raising prices, will be less necessary outside of what has been a normal pricing level of our category in the 2 to 3% range. So you should be thinking about profitable volume growth and more normalized pricing compared to 2018 and 19. How interesting. So the company that was bragging that they have all the pricing power in the world, all of a sudden commodity prices aren't going up, people are buying less Pepsi because the prices are freaking ridiculous, and what happens? Wow. The company takes it in the volume and now realizes, I guess we can't raise prices anymore. So classic. It's the classic inflation story of something that's generically, a pretty generic good, I should say. Yeah, stock got hit a little bit on this, not much. It's been on a pretty strong uptrend. PepsiCo here, very, very nice uptrend. Well above COVID levels here. It is off its highs a little bit, though, following these earnings. Well, and not just these earnings, but, we can go to the day chart here. There we go. We can see sort of the decline even leading into earnings. Okie dokie. So, next. Let's see how New York Community Bank is doing. Let's see here. New York Community Bank. All right. So, yeah, they were up about 17. Yeah, look at that. They were up 16.95% on Friday. How impressive. And why is that? Well, one of the reasons you have that is because you had executives inside the company start buying shares. So I think there's this idea that executives going buying might be a way of propping up the stock, trying to tell people, hey, We can support this. We could prop this up. Martin here says, did you know Michael Burry sold all his New York Community Bank in November? Yeah, good move. I didn't know that. Good for him. But, yeah, you had some insiders buy a New York Community Bank, and that led to some enthusiasm on Friday. So we'll see if that enthusiasm holds as the market moves today. Bitcoin, by the way, look at this. We're sitting at the next Fibby. Look how perfect this move is. You can't make this stuff up. If you're trying to trade, the basics of technical analysis are pretty darn pretty darn clear. Look at this. You're riding the 42 Fibby ish, right? 42.2. And as soon as we get our breakout, we hit our resistance. Sitting over here at 48.5, sitting at the this is your resistance level now. But yeah, look at that. And we did get into no man's land there for a while, which I thought that was very interesting. I couldn't really find a technical reason for it to be sitting there, but it could have been some moving averages. Well, yeah, I'm surprised we don't actually have any of our moving averages on, so we'll have to turn some of them on over here on BTC. See what's going on. But I'll mess with these just a moment. Let's listen to, or we'll come back to this in a moment. Let's go, in the meantime, here for a moment. Let's see what their next topic is.
Alpha Simplex, we'll make it kind of quick here. We're deciding who to vote for in November, Catherine, but I won't ask you that. Is the market fairly valued right here?
Well, when we're looking at it right now, the technical signals are finally in the soft landing camp. And this has been 2 years where we've been in disagreement. So I think in that sense, there is some positive direction in how the market is really finally seeing that there's a good chance we could have a soft landing. But of course, that makes everybody nervous because there's always things that could be a problem. The higher for longer narrative is an issue. And also just, if we have deteriorating financial conditions. So watching inflation this week is going to be important.
So inflation is still important. Have you taken some of the early rate cuts or a couple of them off the table, but still, are you still bullish, even though it might not be as great as we thought, Catherine?
Yes, that's right. We're still bullish, but there is I think the market really got ahead of itself a little bit at the beginning of the year. It was the end of the hiking cycle, so everyone was ready for a steepener, ready for cuts right away. You're seeing a little bit of pullback, particularly in pricing on the short end of the curve. So you're seeing that there's a little pressure on yields going upwards for shorter term rates, which suggests that people are realizing that cuts could take a little longer than they think, and that's finally in the data.
I will have you back, Catherine, fill in more color on exactly what you're thinking about it. We got the gist of it. I appreciate seeing you this morning on this.
Boy, that was like a little word salad he had there.
Which was a movie. We're just talking about the Super Bowl. Whew. Tired.
Wow.
We're done.
Tired.
We're in overtime.
We
Goodbye.
Did. Make
Time
sure,
for
yeah,
Squawk
just like the
Mystery.
game.
Yeah, well, they go to Jim Cramer now. Okay, they shut down fast on the Super Bowl talk. Anyway, so yeah, I mean, I even with the 200-day moving average on, you don't really get anything here for this level here. I turned on the EMA 20 as well, and I mean, not that I was expecting anything down there, but just for giggles. So that's in terms of actual crypto news, there really wasn't anything over the weekend that was substantially notable. I mean, we saw Jack Dorsey hanging out with a Satoshi t-shirt at the Super Bowl. That was neat. But other than that, I mean, I guess now you should have the ETFs doing better, given that they initially sold off. So what do we have? I think ARK B is the ARK one. We should be back to where we were. Almost. Not quite. Looks like they started at probably about $50. And as they opened at... Yeah, opened at 50, exactly. So still down a little bit, a little smidge there. I had to sell off that enthusiasm over the Bitcoin ETF. All right, so we looked at Pepsi's call. We looked at JP Morgan's call on... we haven't actually finished this interest rate call yet. So 45% chance that we'll end up getting a 0.2 to 0.3 here, with disinflation firmly entrenched, with virtually all media outlets revealing a 6-month core PCE trend that has reached the Fed's goal. This outcome is aligned with Powell's statement of wanting to see more good data, but not necessarily better data. Yeah, that's true. I remember him covering this very specifically. That was actually a big moment. It's not saying we're waiting for the data to get better. We just want more of what we've gotten. And it could even be slightly worse than we've gotten. It doesn't even have to be as good as what we've had. I thought that was very interesting. And then 25% chance of sort of a downtime or a downside here. This outcome could, spark some buying for bonds. I mean, none of this is like horribly shocking. If we got a lower level, markets would rally. We know that. Market sees a May or June rate cut with the Fed delaying a March move to see how the recent spike in shipping costs, supply chains more generally will impact the inflation story. Okay. Yeah, I think that's about it for our JPM morning read here. Yeah, here are your freight costs, Shanghai to LA. A lot of this is due to the Red Sea. So you've certainly had a little bit of a pop-off here. Especially keeping in mind where we were pre-COVID. No, we were down there. The Houthis ruined it. How dare they? Oh, well.
Who are old enough to have some money now to buy a thing
Right,
like that.
I think it was a demographic bonanza.
As for the ads, Jim, I mean, you had a lot of celebrity humor. Duncan,
Yes.
I think, tops a lot of lists coming out of the game.
It's good.
We mentioned this going into the game. No U.S. automakers, but BMW walk-in.
That was my favorite.
Really?
Yeah, because I happen to be big Christopher Walken.
Christopher Walken. More cowbell. That's all I remember. Okay, so let's see here. What else? So, commercial real estate issues aren't systemic, says Bank of America. Okay, we'll see. Oh, a little quiet here. New York Community Bank's commercial real estate risks are not an omen because banks are more prepared. Okay. New York Community Bank's real estate issues could signal a shift in the bank's risk to asset quality. Yet, U.S. banks may be better prepared for potential headwinds this year due to 3 factors. Bond relative valuations, annual stress testing. Well, yeah, bonds are relatively inexpensive, I would argue, compared to where stocks sit. So that should give you some tailwind. Let's see. Annual stress tests have been larger. Okay, yeah, well, that's boring. Fine. As I talk about New York Community Bank, there's literally a piece that just pops up. 10 reasons to stop worrying about New York Community Bank. The U.S. economy is solid. Fed now real GDP sitting at 3.4 for Q1. Yeah. Aside from struggling offices and some apartments, warehouse REITs, for example, are outperforming. New York City is far from dead. Luxury firms buying out landlord buildings in Manhattan. Okay, yeah. New York Community Bank's office and apartment loan issues were specific to New York Community Bank. Yeah. Office problems are well understood. Office properties account for a small portion of REIT landscape. Silicon Valley Bank was significant. New York Community Bank is not. There's been no run on the bank. Most regional banks have relatively little office exposure. Large cap banks are in better positions. And Powell doesn't seem worried. Well, it is true Powell doesn't seem worried. I mean, he refused to even, it seemed like, let anybody ask about the banking crisis. And that was probably the most shocking part about FOMC day is, we had New York Community Bank plummeting like 10-something%. And Nobody asked a single question on it. Not a single question. None of the reporters. And he didn't bring it up. And they removed the phrase, the banking sector is sound and resilient. It was I think they were trying to go for a power move there, just by ignoring New York Community Bank entirely. Yeah. Well. India inflation drops. Let's see. What is this? We don't see the Reserve Bank of India letting go of its hawkish stance, even as consumer inflation declined sharply for the first time in 3 months in January. Record low policy rate gap between the RBI and the Federal Reserve means India's central bank will only begin easing after the Fed starts. Inflation fell to 5.1% year over year from 5.7% in December. I like me some falling inflation. What's next? How about this? Let's see here. Nvidia CEO. All right, what does Jensen have to say? Anticipates that advances in computing over the next few years will keep the cost of developing AI well below the $7 trillion that Sam Altman is said to be fundraising. Yeah, I thought that was very interesting. Sam Altman hitting up Saudi Arabia. Yeah, we're gonna need 7 trill to rebuild everything. You can't just assume that you will buy more computers. You also have to assume that computers are going to be much faster, and therefore the total amount you need is not as much. Yeah, what a wild world. Good old AI and Nvidia. Boy. I know there are a lot of... Look, it's up another percent in pre-market. I know there are a lot of people who are like... oh, wow, look at this. On a technical basis, remember when we were talking about a breakout right around $500 between 490 and 500? And as soon as we had that breakout, I remember saying, I don't know where it's going to go from here, but we don't really have anything until 721. It's been straight up. Oh, 731 rather. It's been straight up to basically 731. Holy smokes. You know, that's scary. After that is 969. I don't know. It feels very euphoric, and it does seem like something that you know, there are going to be some people who sell Nvidia before earnings, and they're going to be really grateful if the stock falls after earnings. And then there are going to be other people who, you know, will hold it and then watch it. It just keeps going up. They're like, ha. When there's so much euphoria, it doesn't seem sustainable. Let's just put it that way. But then again, you know, those valuation measures. Let's see. Let's take a look. Let's see where we sit right now. Forecast. So we've got $12.33 forecast for this 10K. And then we'll get to 20.85 next year. That's crazy. So 721 now divided by 1233, sitting at 58 times earnings. Yeah, okay. And then the forecast growth, 14. Okay, so 94 divided by 4 puts you at about 23.5 times. That means you're trading for about 2.5 peg. Well, still beats Costco and Palantir. Those guys sitting at the 4. It's wild. Wild.
You know, because nobody's that transparent. But here it is, David. Now, you know I like to highlight.
Yes.
Weekly, my wife bought me 100 highlighters for my birthday. Weekly warm-up, premium on quality. Quality growth showing relative strength. Renewed focus on operational efficiency. Balance sheet quality becoming more important. This guy has come out, second half readjustment, right? And just he shuts Purdy down with this thing. This is Purdy shutdown. I like to look for 24 hours. We can relate everything to the
Is
NFL.
that
You said the pass rush would be key.
Yes, it did.
Although, but who knows what they could have done with more Gainwell? Yeah.
Yes, yes. But
On
I
the
have
other
to
side.
tell you that when you have the adjustment that Andy Reid does, he did it to us last year. We were up by 10 Super Bowl, and he just figures it out. He's a pretty calm guy, imperturbable.
Great piece in the Kansas City Star about getting yelled at by your tight end.
yelled?
Nothing.
Doesn't-
He almost got pushed to
Yeah.
the ground.
Nah, it
Doesn't
means
really
nothing.
faze you. Just-
Nothing phases Coach Andy. Nothing.
The
He's a
memes were
great
pretty
man.
funny. All the memes
Yes.
of
I
Travis
just,
Kelce,
he's a
what he
great
was
man.
actually
I
telling
love
him.
He
One
never-
was, you told me to sell Nvidia at 300.
No,
You saw that one?
no, did it really?
Yeah, that was one of the memes.
No, he didn't. He didn't give a big Mad Money shout out at the press conference against in the Kansas in the Chiefs
Miami
game against
game.
Miami.
Yeah.
Big shout out. I think he said, I don't know whether Rice had his Mad Money on. Somebody had Mad Money on. What a guy! Can I just tell you? I mean, if anyone gets to meet him, he's a loved father of everyone on the team. Okay. I mean, he treated my father as if it was his father. There's just nothing. I have nothing but incredible positives to say about him. He's an amazing man.
When we come back, still to come, how much does it cost to develop AI? NVIDIA's Jensen Huang responding to that report of Sam Altman seeking to raise $7 trillion for.
We already covered it. All right. What else? Let's see. Let's see what the Journal has for us today. So, the Wall Street Journal starts with Israel. A lot of talk about Trump and the NATO issue, but that's really a separate topic. How China miscalculated its way into a baby bust. Yeah, let's see what we got here. You know what? One thing that I do think is interesting is that one-child policy. I mean, that's probably what they're going to talk about here. But boy, that really hurt. I think the consumer potential of China substantially. And we'll see. Here's Baba. Let's see how K-Web's doing. You know, these have been down for so long. Yeah, straight downtrend. But China's baby bust is happening faster than many expected, raising fears of a demographic collapse. Wow. The rapid shift wasn't projected by architects of China's one-child policy, one of the biggest social experiments in history, instituted in 1980. At the time, governments around the world feared overpopulation would hold back economic growth. Oops. 4 years later, China is aging much earlier in its development than other economies did. The shift to fewer births and more elderly citizens threatens to hold back economic growth. In a generation that grew up without siblings, young women are increasingly reluctant to have children. You know, I saw something yesterday. It was talking about how, like, 45... What was it? No, it was about half of women in America under 45 do not have children. And 45 is such an interesting number because it's kind of when you kind of can't have children anymore for probably, I would guess, 95% of women. So that's rough. Half of women under 45 don't have children. That's very interesting. Anyway, but it is under. It doesn't account for under 45 down to 18, right? So, you know, there's still time, obviously, to change that and skew that. But anyway, so on this China number, births in China fell by more than 500K last year, accelerating a population decline that started in 2022. That is also interesting, a generation that grew up without siblings. Well, that's kind of sad. Officials cited a quickly shrinking number of women of childbearing age, more than 3 million fewer than a year earlier, and acknowledged changes in people's thinking about births, postponement of marriage, and childbirth. Wow. China's fertility rate is approaching 1 birth for every woman. Less than half of the 2.1 replacement rate that you generally want to look for, or the 3 that they had in the 1970s. Wow. Wow, that's crazy. So, boy, I thought the birth rate in America was low. There's this half. So you're at like 1. I think we're at like 1.6 or something like that, which is also pretty low. Our birth rate's been under replacement rate for a hot minute. It's crazy. Yeah. Well, a lot of pictures and interviews here now, and the rest of the story with retirees. It's a retiree nation. Oops. Oh well. What's this? Cash flush buyers dip into distressed commercial real estate. Oh, boy. Damn, that sounds like house hack. Turmoil in commercial real estate is sending jitters through regional banks and other lenders, but one group is pleased with the turbulence. Investors sitting on piles of cash they raised to scoop up distressed properties. Hell yeah. Yes. Oh, this is interesting. I might have to make a video out of this for house hack. We're at a period of time where it's a great time to have dry powder, buying distressed properties, plenty of deals out there. Yes. I agree. Yeah, kind of fun. All right, well, we'll review that one a little bit more later. 13 minutes to the bell. What else? The Great Salt Lake is full of lithium. A startup wants to harvest it. Oh, that's very interesting. Wall Street Journal. Stocks are stocks are at records, but are they expensive? Ooh. S&P 500 PE ratio. How interesting. Right after COVID, we were sitting at like 22 to 24 times. Now you're sitting at like 20 for the forward PE ratio. So you're definitely hotter than what you were before COVID. Before COVID, we were sitting at like 16, 17. Now we're sitting at 20 on the S&P 500. And earnings have really picked up relative to the last 12 months. It's a good thing. Growing economy. I don't know. This whole soft landing thing seems wild. What would your solution be to the birth rate, bro? I don't think there's a solution that any one person can figure out to that one. You know, who knows? That's a great question. Trueflation showing real-time CPI at how do they swing so much? They were at like 1.3 last week. What are they saying today? No, it still says 1.3. 1.37. Where are you getting the 1.9 figure from? Yeah. US daily Trueflation. Well, let's get 1 hour ago. Yeah, there it is. The 2nd of February, or rather the 12th of February. US daily Trueflation rate, 1.37. As I always say, every time I bring it up, I think that one's off by about 0.5%. I think it's very interesting. So, let's see here. Let's let Kevin have all the babies. I love babies. Tucker complains about birth rates with Space Karen, but Tucker has no kids. Ooh. I didn't know that. Well, that's a bummer for him. I mean, I guess it's not too late. How old is the guy? He's got to be like, what, 55 or something? I don't know. How old is this guy? Oh, 54. They're so close. Who knew? Tucker Carlson was born in 1969. Oh, wow. In 2000, the S&P 500 was at a 30 PE. Yeah, you know, I actually really believe that there is a real risk of, like, this is just the beginning of the euphoria. I've mentioned that before, but I know things feel euphoric now. I think it's just the start of actual euphoria. When you get rates coming down, an economy that doesn't go into recession, I think this it's very likely that you're going to see, you'll look at this in a couple years, or maybe even a year and a half from now, and the stock market will be up over here. Like the Qs will be like 654, and we'll look at it and be like, holy crap, it's a Nike swoosh. And then we'll be getting to the days of like true euphoria, where it's like, what the hell, everybody's getting into stocks again. We know Biden's solution. Allow millions of illegals in a year. Oh, he went there. Steve went there. Oh. Let's see here. Will non-accredited investors have to wait to mini funds to invest in HH again? Possibly. Tell me more about House Hack. No, I refuse. Just go to the House Hack YouTube channel. This is the stock market open. See, I even named the channel and the title of the video that. Stock market open. This ain't House Hack. Although I do have that on the screen in my bag. Yeah. Let's see here. Kids are way too expensive these days. Yeah, I agree with that. I think somebody here saying Tucker has 4 kids. So what's just true? Does he have kids or not? Oh yeah, he does have kids. Why did somebody say he had no kids? Yeah, he's got 4 kids. Oh, that's cool. Oh, he's been with his wife since 91. Oh, good for them. So, yeah, he's already got a 25-year-old. Okay, wow. Well, that's a good little fact check. 2 25-year-olds. Wait, how did that happen? Are they twins? Buckley. Oh, wait, no. Well, this is dependent on when the reports were of them. But yeah, okay, 25, probably 26-ish. Then you've got, let's just try this. Ages. Let's try this. Oh yeah, here we go. Okay, so. Okay, yeah, one was born 1994. Okay, well that puts him at 30. One was born 1997. That puts him at 27. And one was born 1999, which puts him at 25. And another was born in 2002, which puts him at about 22. So 4 kids in their 20s. That's actually cool. Wow. Yeah, I don't know who said he didn't have any kids. I didn't know. So, but that's a good fact check. Very interesting. Speech by Governor Bowman defining a bank? Oh no. Is this the week for a 5% pullback? I think if there's going to be a 5% pullback, it's after Nvidia earnings. I think that's when you get your. I mean, it depends what happens with CPI tomorrow. Bowman, not yet where rate cuts are appropriate. Oh, well, that was a week. That's 10 days ago. That's boring. Oh, here we go. Fed Bowman doesn't comment on monetary policy in speech. Boring. That's funny. They don't even give her speech or any of the other context of the speech. It's just like, no comment on monetary policy today. Yeah. Miners are about to pop, say one of you. Oh, yeah? Pump it. Baby Summer. She's doing okay right now. We'll see. 2 surgeries down. 1 more to go at least. Travis Kelce's behavior last night. Well, you could look on my Twitter. My X post. Is Pepsi a sign of the consumer not as strong? I think Pepsi is a sign of people going, F you, Pepsi, for continuing to raise prices. Drink something else. I mean, you also have to think about, like, how much choice there is in the drink market. You know, Pepsi owns Gatorade, and I love Gatorade personally, but you know, look at the new like hydration drink market from not only like Celsius or Logan Paul's drinks or whatever. There's so much competition now. So, you know, you start raising prices, assuming that you're invincible, you're screwed. just absolutely screwed. So I don't know that necessarily it's a sign the consumer's hurt. I think the consumer's being more choosy, as they should, right? The consumer should choose based on price and quality. There should be a balance of price and quality. And so when you start feeling ripped off about Pepsi, you stop buying. Once you go stevia, you never go back. Well, I mean, they're using stevia and Gatorades as well. You know, I mean, that's you know, it has a very specific taste, but it's designed to mimic the taste of sugar without being sugar. It's kind of a fascinating discovery, I guess you would call it. It was stevia, I believe, if I remember correctly. It's natural, supposedly. I mean, I always get sussed out about all this crap. A sugar substitute extracted from leaves. 50 to 300 times the sweetness of sugar. Human body does not metabolize it, which means therefore it has 0 calories. Slower onset than that of sugar. And there could be a little bit of a bitter aftertaste. And the legal status of stevia is as a food additive or dietary supplement. Why would you supplement with it? Anyway. Yeah. I don't know, man. I just want fruit and nuts. That's all I want. Oh, I eat more than that. Still like burgers and, you know, French fries and pastas and yummy, delicious stuff. But let's go back to core. You can't go wrong with fruit and nuts. Nobody ever tells you fruit and nuts cause cancer or problems. And obviously no guarantees, but yeah. All right, anyway. So 1 minute from the bell. We've got the Qs sitting about down 3 bips. Nvidia up about 65, and nuts will make you fat. Yeah, no, it don't work that way. Nuts might be high in fat, high in unsaturated fats, very healthy fats. That doesn't mean they make you fat. Usually it's saturated fats that cause real problems. But we don't need to go down that rabbit hole right now. We got to listen to the bell. Nuts aren't good. Dude, anybody who shits on nuts doesn't know the first thing about nutrition, and I will die on that hill.
They allow you to bet. It does well. In the meantime, I had, just full disclosure, I had a fantasy show on DraftKings, and they are very good at getting attention. And nobody gets more attention than Barstool. Nobody. Who liked, by the way, the halftime show. That was really good.
Let's get the opening bell here and the CNBC real-time exchange. At the big board, it's Deutsche celebrating Black History Month. At the NASDAQ, it is Etsy celebrating the recent launch of its gift mode, which combines AI and human curation. There's another ad from last night.
Did they somehow come up?
You know, the person I bought my plane from, his name was D-E-E. And he left me nuts. So we always enjoyed eating D's nuts while riding the PP. Oh, God. Okay, anyway, so down 6 basis points so far here at the open on the Qs. Got some red candlesticks to start the day here, with the exception of BABA going up. It's also possible you're going to get some red candlesticks, mostly just because tomorrow's CPI. I always think the day before a catalyst like CPI, it's really hard to buy stocks, with the exception of what you've got over here, which is New York Community Bank. Clearly, there's some buying enthusiasm over here. You've got 5.5% on New York Community Bank. You've got Tesla down about 0.5%. You're trying to get a green candlestick here. Cloudflare, CrowdStrike, they had a good week last week, both down 0.5 to 1/3%. Palantir's given up 1%, also trying to get a green candlestick in there. You've got Supermicro Computer, red candlesticking a bit here. You've got Eli Lilly, 0.5%. ARM, wow, another 7% on ARM. Look at that. Holy schmokas. You've got Costco down about 25 bips. Ralph Lauren down 21. ARM up again. Their margins are phenomenal. Really great profit margin, I will say. But wow, for a company with very, very low float and a big sale event potential coming up soon, it's pretty remarkable. But also keep in mind, Bezos is dumping shares of Amazon. The stock's doing fine. Look at it. It's all-time highs. He just dumped $2 billion worth of shares, and he's expected to dump even more. The stock can support it. There's been a lot of enthusiasm for Amazon since, really the end of last year. It's been fantastic. So great moves here. So let's see here. What is next? Oh yeah, that's right. Tesla's got the $1,000 off until March, I think it was, and then they're gonna raise prices again. So you're kind of doing an expiring coupon code link down below. Although now the only thing expiring is the stock price, getting a red candlestick over here, while you're getting exactly the opposite over at Nvidia. It's kind of like the more Tesla goes down, the more Nvidia goes up. It seems sustainable. It's certainly been the bet so far. Oh yeah, look at that. Cloudflare and CrowdStrike now. Actually, more Cloudflare giving up a little bit. 2.6. Let's see where some of the larger movers are. Larger movers, you've got Lunar, Joby Aviation. We saw those in the AM. Let's see what's going on with Lunar. And then New York Community Bank. So Intuitive Machines. Let's see what we got here. Intuitive Machines sees 11.8 million in gross proceeds. Let's see. Change to a different CFO. Lunar mission date sets January 2024 for lunar mission. How? That's in the past. Oh, well, that's from October. Oh, so there's really no news here. Yeah. Did they do their mission? Lunar Intuitive Machines. I mean, maybe that's what it is. News. Let's see here. 5 days ago, Intuitive Machines edges closer to historic moon mission. Oh, okay. That's probably why. Some enthusiasm on the moon mission. Well, they must think there's going to be a lot of earnings per share on the moon or something. I don't know. How are you going to get paid for going to the moon? Who knows? Whatever. So, very well. Okay. Let's see what else the suits have got for us. Go to the Qs here and just hold here for a moment. Look at that. Q's going positive. Tesla trying to go positive. Don't look at it, folks. Just don't look at it. Nvidia up 1.29%. Too many nuts caused kidney stones? I don't know. That sounds like you ain't drinking enough water to me. These kidney stones are calcification, no? I don't know. Maybe somebody else can chime in on that. Kidney stones. What nuts? I mean, I know there's calcium in almonds, but yeah, way more calcium from like milk. Whatever. You can get off that. All right. All right. Let's see what we have here. Rate cut trades of 2024 now delayed as Fed treads lightly. They're now set to be delayed as the pace at which the Fed travels towards lower borrowing costs is up for debate. Yeah, that's old news. So, let's see here. What else? Israel, more strikes in Rafah. We saw that. City hit with new Fed demands. Okay. What do you got here? The Federal Reserve slapped Citigroup with a series of demands to change the way it measures the risk of its trading partners. Regulators sent the bank 3 notices last year, directing it to address the matter in the coming months. Ooh, how threatening. Okay. What else? Commercial real estate loans rattle Canadian banks as profit risk contained. Okay. Barstool and DraftKings deal launches minutes after Super Bowl ends. Barstool Sports wasted little time announcing its new multi-year sports betting partnership with DraftKings. As part of its separation from Penn Entertainment last year, Barstools was prohibited from partnering with another sports book until the end of the NFL season. Less than an hour after the Chiefs beat the 49ers. Barstool owner Dave Portnoy posted a video announcing the partnership. We're back to our roots. DraftKings is again the exclusive betting partner of Barstool Sports. Wow. Oh, that's actually funny. I love that. It's just like, that's like the perfect like pettiness that's just so entertaining. All right. Super Bowl's over. Post. I actually like that. I think that's kind of cool. All right. That's what the deal was. That's what the deal was. How low will rates go? The hunt for the new neutral level. Ooh, I want to read this Financial Times piece. Don't put me behind your payroll wall, you jerks. I'll get in. Here, take my money. Haha! I have given them my money and now I'm in. Okay. As markets boost their bets on interest rates this year, investors are heavily focused on exactly how low borrowing costs will eventually go. Okay. After falling to rock bottom levels before the pandemic, the neutral rate has, by some measures, edged up more recently. This could suggest the official rate will not head as low as pre-pandemic levels, even as inflation eases. Well, remember, J-Pow did kind of give us a little bit of a heads up on this. Sort of like, hey, you know, we kind of want to leave somewhere around 2% in the event there's some kind of turmoil that we want to be able to support for. Remember, when we were at the effective lower bound, the ELB, which is basically 0%, the Fed starts kind of freaking out a little bit. Sort of like, what do we do if we go into a recession and rates are already at 0? Yeah, do you go to negative rates? And the Fed is, at least at this point, highly resistant to doing that. Yeah, so we'll see. Okay, I want to keep reading this. Give me one sec. And today is, I can't believe it's already February 12th. I don't know. It's going too fast. I'm going to slow this crap down. That's all right. I'll get through it. Okay. There we go. All right. Let's see here. Whether you're a banker, a business, or household, I don't think you should expect interest rates to go back to pre-COVID levels. You're probably not soon. It's going to take some time. I agree with that. That's why I say give it 10 years. 10 years and you'll be lower. This puts our star, so some fancy calculation here. This puts our star at the third quarter of last year at 0.9% before inflation. A big fall from levels approaching 4% at the start of the millennium. Sure. The neutral rate is estimated to have declined since its peak in 2000. Yeah, I mean, they're basically just showing a chart here about how the neutral rate is like, it ran up during inflation of the 2021, but now it's lower, almost as low as where it was during the 2010s. I believe that. So, central tendency estimates for a longer run Fed funds target of 2.4 to 2.8%, putting R star somewhere between 0.4 to 0.8. Right, taking into account the 2% goal. Right. Because if the Fed's goal is, 2% inflation, and you have rates at, say, 2.5%, it implies that the neutral rate is somewhere around 0.5%. Okay, interesting. That's fair. Or I guess R star rather, and then the neutral rate would be 2.5%. Fair. Experts think the real neutral rate of interest rate, blah, blah, blah. Okay. Yeah, we'll see. I mean, that's just like pure guessing. It's like shot in the dark guess. Well, that's still kind of entertaining, I guess, to speculate on it, but all right. How was these sticks moving? China's consumers tighten belts even as prices fall. Oh, wait, this is actually interesting. Chinese EV prices are tumbling, but let's see here. Somebody's got cash, talking about someone's situation. Prices falling. The world's second largest economy has been in deflation for the past 4 months, falling at their fastest annual rate in 15 years in January, with the headline figure driven by food And consumer good prices, let's see here. Wow. Car prices plummet. Deflation data taps into longstanding concerns over consumer demands. Yeah, it's going to be really interesting. If China's in rapid deflation, what does that do for the broader market? That'll be really interesting to see. Somebody says BTC is moving. Let's see what BTC is doing. Bitcoin. Here's your 1 minute chart. Bitcoin over the last 30 minutes. It's trying to get up to that fib. Come on, pump it up. We've got to pump it up. Q's a little all over the place. Yeah, good old deflation. Oh yeah, and look, there's the other argument. I've said this before too. China to export deflation to the world as its economy stumbles. Totally agree. Prices of Chinese exports have fallen at their fastest rate since 2008's financial crisis. Wow. China will be exporting deflation to the rest of the world, and you will find various countries dealing with the fact that China has built up overcapacity. I mean, yeah, that's great for manufacturing. Well, I mean, for people buying consumer goods, it's great for loose supply chains. Few economists expect developed economies to record similar outright falls in prices, but many think China's deflation could have a significant impact on emerging markets. Take some of my deflation, please. Please take it. Oh. All right. Okay, let's see bond yields and the Fed rate monitor. Let's see how we're doing. Let's see. So, 10-year flat, basically at 4.18, pretty much not moving. 14% chance of March cut with about 58.5. So almost a coin toss for May. That's really interesting. Coin toss for May, 96% chance we get our cut by June, and then by December, we're sitting at 5 rate cuts, pricing in at a coin toss for 5 rate cuts versus 4. That's where you sit in December. Okay. All right. Okay. Yeah. All right. So what happened in the AM here? Look at that. Nvidia, green candles over here. Let's hit Meta. What do you got on Meta? Oh yeah, look at that. You had some green candlesticks vastly across the board here. Look at New York Community Bank still moving. You got really that trader momentum picking up on what you had on Friday with that 16% gain. Nvidia's bobbing around a little bit. Tesla's green, but we won't really look at it. Even Palantir's green. Super Microcomputer, another green day. Another one. Enphase up 4%. There's a potential trade. The closer you get to rate cuts, I think the more trades you have on the interest rate sensitives. Dave & Buster's up 2.3. Goodness gracious. Apple's basically flat. Nothing going on at Apple. Wild. Coinbase moving a bit too. 145 now. BTC USD. There we go. Getting rejected. Not a surprise. Simple technicals. It's not hard. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Wow. What happened to Under Armour? I did not know this. Holy crap. In 2015, Under Armour was a $53 stock. if you had held Under Armour, and you put $100 into Under Armour, you would have $15 left after 9 years. So for anybody who's like, oh yeah, just hold on to it for the long term. God. Wow. Didn't realize that one. Anyway, thanks for being here, folks. See you in the next one. Goodbye and good luck.